So, hi guys, welcome to the another session of private equity. तो आज हम शुरू करेंगे प्राइवेट इक्विटी पोजीशनिंग के बारे में। तो प्राइवेट इक्विटी पोजीशनिंग क्या होती है, हम इसके बारे में आज शुरू करेंगे। ठीक है, तो नज़र बनाए रखें और शुरू करते हैं आज के सेशन के बारे में। हाँ, तो देखिए सबसे पहले private equity is an alternative assets class. ठीक है. So what does it mean by that? There are people who invest in private equity, but alongside they also invest in hedge fund. They are also invest in venture capitalists. This is a subset of the hedge fund and private equity. So basically, what happens? There's some misconception which we might need to clear about before we uh, move ahead. So that is first is what is the difference between the private equity and the venture capitalist? What is the difference between the private equity and investment banking firms? And what is the difference between the private equity and hedge funds? And the different types and scope of the private equity investments. ठीक है, तो इन सब चीजों के बारे में हमको सबसे पहले जानना होगा। तो शुरू करते हैं। So second one is this how the private equity funds uh, put itself that we have to understand. ठीक है. So what it does says mm, that private equity is simply a non-public financing, right? It as the name suggests, it's a private. So it should not be come from to the public company. So the investment that is made by the private people, that is HNIs, high net worth individuals. ठीक है. This is the public, non-public source of capital in exchange of equity. In other words, the margin investment, bridge loans, and venture capitalists, which is told you, this is a subset. Venture capitalist is subset, and even the seed funding in a startup all considers private equity. But when the people call it private equity, they mostly want to refer is LBOs, that is leverage buyouts. Leverage buyouts, which is a different thing, and but it is a subset. So we will be seeing it that it has a different scope and goals than different than the venture capitalist. ठीक है. So this is the thing that we will see. Thereafter, fundamental of P positioning में सबसे important चीज़ है when the someone talking about P versus VCs, they are actually talking about the LBO versus venture capitalist. Okay, what is LBOs and what is venture capitalist? So LBOs are usually the person who really deals when the entity is a global, the fund is a global. There's established companies that are just to be optimize the operations, while the VCs work on a different thing that are starting to expand and recently proved products. ठीक है, तो वीसी क्या करता है? वीसीज आर दोज पीपल हु जस्ट वांटेड टू ड्राइव द वैल्यू इन द फॉर्म्स थ्रू द improvements and optimize their products of the company. These are the companies which are very early stage companies. Usually VCs put their monies and take a control and convert those products is a high sellable products, and this is how they put the operational efficiency and the financial re-engineering into their business, and this is how the VC does the business. And where the LBs are different, where the companies are global companies and well established companies, especially like more than $1 billion market cap companies, where the VCs work into the like 1 million to 1 billion companies. This is for VC. ठीक है. Then VC 1 million to 1 billion and usually start with the 1 billion mark, which is for LBOs. ठीक है. And we see spray and pray model पे work करते हैं. They work in spray and pray model. Like they're putting investment. They are supposed to make it convert into that business is a very profitable business because they invest at the very early stage of the company. And very every investment has to be exercised due diligence, and it must work because this is how VC works. It must work, and even the LBOs also must work in all the cases because they are more or less working on making money rather than making it companies more operational successful. For the LBOs, this is what LBOs looks like. They have similar pipeline. Most more or less private equity and VCs have a similar pipelines. like sourcing and thereafter investing. But before sourcing and investing, they do a rigorous due diligence and all. So this is the other thing. And thereafter, private equity investment banking are not similar. What is the difference between private equity investment? These are not similar, but these are the complementary services. What does it mean by complementary? So private equity are the people who want to invest, but at the same, these investment bank are the more or less like a salesman people for the private equity firms. So IB presents, so investment banking people make a pitch deck, which is investment opportunities, investment opportunities for the private equity firms or the other corporate buyers. So these are complementary. I mean, both people sit in a different direction in different tables. One is a buyer, one is a seller. Okay. These banking firms also helps us at the time of when the PE exit, right? To make it like buying. I mean, make an arrangement for corporate buyers or IPOs for exit. So this is what the investment banking firm typically looks like, and how the private equity firm works like. They are the purchasers, right? And one is a seller. So IPs have a more positive outlook than PE firms. They just want to sell it because they are salesmen. Many times valuations are the creative to make a deal sexier. While PE firms are buyer, they think much deeper in terms of deal. So since you are buying and the private equity firm basically runs on the two things, that is a making doing the due diligence and making it operational and financial engineering, so that you can make your money in the uh, especially time horizon like 5 years or maybe 10 years. But for investment banking, these are the salesmen. So they sometimes come up with the good valuations so that the deals look very sexier and the private equity firms usually participate to buy that. So IB is keen seller of the existing PE firms as well. So existing PE firms, they also sell them. So this is the for difference between the investment banking and the private equity. Thereafter, we see the hedge funds. So hedge funds are very different than the private equity in scope and operations. Hedge fund works in a different way than private equity. So hedge fund are usually open ended. Hedge funds are usually open ended. Matlab, once the and open ended, it means like there is a commitment of capital, then it's upfront in operational wise, right? You need to, if you have a commitment of 10 billion or maybe 10 million, then you need to pay first and thereafter you will be participating. But at the same time, the private equities are close-ended funds. But I mean, redemption and liquidity is not good in the private equity rather than hedge funds where these are open-ended funds. You can simply you can sell out whenever you want. Private equity usually invest in the blindly and accept a hold period. So private equity basically works on the product or the companies which are very early stage, and they don't know that whether it would be able to make it or not, because if there's 100 startups, there might be two or three startups that get success. So this is how the private equity works, and their capital is drawn there through the and their capital drawn down through the several calls. This is what we call a capital calls. This is called at the different period whenever they're required, where the open-end fund hedge fund allocate funds are immediately, and there's a transparency in terms of underlying assets and redemption can be done. So आप redemption भी कर सकते हो easily. So hedge fund do not have a same type of expertise, due diligence capability in pipeline PE firms do, and so PE firms has to be successful. This is how the PE firms work. So there would be high due diligence in terms of PE private equity firm rather than hedge funds, which are close-ended fund, because since there's a high liquidity, but once you have come into the private equity, it's not that much easy. There's still call a concept of uh, secondary market, but primarily and in general you are not able to quit once you have entered into the private equity. So that's require a great amount of due diligence before entering into this. So this is the big difference between the hedge funds and the private equity. And thereafter, LBOs, which we have discussed, like we will discuss further, most frequent and famous, right? And simultaneously infamous is also types of private equity transactions. There are multiple types and models for the PE in general. One is some PE firms invest in any sector. There are some private equity firms that invest in any sector. right? They are not specific to any tax sector or maybe not agriculture sector or something. Where some P they might invest in some specific funds mm, any sectors they can invest like BlackRock and KKR funds. Right. And thereafter, some PE firms wants to create a value quickly and flip the company, like in IPO or PE firm. So some private equity firms basically concept is like just like having a concept of 4 to 5 years where they wanted to uh, put a operational efficiency and financial re-engineering and all, and thereafter they was want to make exit through the IPOs and all. And where the typical private equity firms, more general term, they want to hold their investment for longer period and want to see the appreciation in their value. Some focus on financial engineering and optimize the deal, while other focus on operational limit. This trend is towards a latter. So now we currently a trend in operational optimization rather than financial engineering. And now in current private equity firms, some companies take control while others happy just speculating and providing advices. So there are some private equity firms. They have their own management and own team of excellence who try to take a control over over the firms and then want to make a changes into their product re-engineering and product development and wanted to come out as a winner to flip the companies as successful companies very early. So this is what they do. And thereafter, I think that's all. I think that's all in this session. I think we have completed and covered each and every point. So, as we have seen in our basics, that what is the difference between the private equity and the hedge funds? What is the difference between the private equity and venture capitalists? What is the difference between private equity and the investment firms? And what is their horizons? How they are operationally different? And what are the objects we have also discussed? So, I think this is all. For this session. I think if you really like the content and slides and everything, then please do like, share, and subscribe. And इसी प्रकार से आप promote करते रहे so that we just work on that on those sessions, and it would also help me to improve my content and all the other stuff. Thank you guys. Thanks, and please do like, share, and subscribe the Finsight.